All right, guys. Highlight of the day is actually a little bit of a low light. What do I mean by that? We had a pretty good congestion rectangle from just before the open for the first hour and a half. Okay. They couldn't get above 24 even, which was yesterday's high and all these swing highs up there. So the market was going to determine a winner above here or below here. Okay. And then right around 9:45 Central, it fell out of bed. And it was more than just determining a winner, in this case, the bears and the shorts, getting through the bottom of these swing lows. Because you have to understand that if you're long from anywhere in here, you're probably got some popular I'm wrong prices, whether you put your sell stop there or not, to puke the long inside this circle, right? Outside this box. Usually, a good rule of thumb is if a fifth grader would put their sell stop right in here, most of the rest of the world's putting their sell stop right there, and then or chasing it. Because generally, when you get a protracted and decent follow through on a sell off, it's because longs aren't selling. It's because they're trying to sell and not getting filled. That's what's important to understand about trading. It's not just what they do, it's what they're trying to do. And if longs are not getting filled, they're still sellers and they're still chasing. After you sell it, you're a buyer. After you're short, you're a buyer. After you're long, you're a seller. And so the longs chased it all the way eventually down to there. Now, why I say this is kind of a low light, we'll call it a dim light, because we didn't know in here what happened other than it was releasing some sell stops. That's fine. But we didn't have people long underneath here for this reason. But there was a good chance there was some sort of news event that there was some confluence which drove us lower in here. When I say confluence, something that was bearish that came across the wire, and at the same time, you determine a winner through the bottom of those swing lows, through the bottom of what I call a congestion box. And unless you haven't watched any of the videos that are done on this channel, which you should subscribe to because we do them 5 times a week, but unless you haven't watched any videos, this is a congestion box. It's important to be able to visualize those because you're going to get your fifth grader that's going to put, oh, I'm wrong below there, mommy, and I'm right above there. Or if they're short, they're wrong above here, and they're right above there or below there. So fifth grader, when it's popular to fifth grader, you want to know it because it's popular to the rest of the world. Fifth graders could get out of winners, but they're terrible at chasing losers. And that's most of the rest of the world's like that too. They go crying to their mommy when they're wrong. But here's the point of this sell-off here. There was some things that came down the wire that we didn't get. And we subscribe to News Source, and we have a room, and we have a lot of eyes and ears on stuff. And it was kind of too late before we were apprised of what actually maybe happened. Sometimes it's not news. And now I'm not 100% sure this was the news driven. But then at about 30 minutes after, 25 minutes after, Bloomberg had reported that we didn't get. And there was just some rhetoric on the South China Sea. And, that's kind of sort of been a hot spot in the world for the last year or so. And that came out either coincidentally at 9:45, 9:44 with this sell-off, or it wasn't a coincidence. It was just pushed it to where it wanted to go, maybe. And this is not a terribly bearish comment. But when you add it to going through there, the downside was the right side. And we knew that in here. We didn't have to wait till down in here. The only problem is we should have known it in there what the news event could have been. So what you want to do is always put yourself in a position to miss less. I don't mean less trades, less economic, geopolitical events that are happening that cross the wire that have you ask, why did this happen? What just happened? What just happened? If you're asking that question a lot, you're missing too much. Once in a while, you're going to ask that question, but you shouldn't ask it a lot. Today we asked that question, but we don't ask it a lot because generally we have it covered with a lot of people, not only in front of different news sources and stuff, but the eyes and ears that we have on that stuff know what to watch. They know what is nonsense and doesn't matter and what could affect the market. One of the things I put on my sheets every day is drivers. And I list what I think is driving the market, if anything. The election, stimulus package, the virus, part of the virus, vaccines, whatever it might be for that particular period, just to keep yourself objective. And also, like, subconsciously, what comes across the wire, how much the market's been worried about that. You should always know if there's a driver out there. The tech stocks have been amazing drivers to the upside since the pandemic was priced in the rally from the lows of the pandemic. And those stocks have driven us up to all-time highs in the NASDAQ, all-time highs in the S&P. They took the Dow all the way back to where it started February 22nd, when it started pricing in the pandemic. So, when those started getting corrected last Thursday, a week ago from today, guilty by association. You had a lot of downside. But these 24s are really impressive. They're not going to hold the next time they go up there. Just mark my words. The date today is September 10th. And when and if it goes, well, it'll eventually go back up here. It's not going to go straight through it. It'll maybe jostle around. But based on all the attempts there and all the attempts yesterday, because it was yesterday's high, the day before high on Wednesday, what happens is people will, when it gets up here, you'll get a lot of fifth graders, guys who don't know what they're doing or are too young. They'll say, well, look, mommy, it worked over here. If I'd have sold it there, look how much money I would have made. So they'll sell it here, and they'll get yelled at, and they'll cry to their mommy because they put, poor stop placement. They're not disciplined, right? But the excuse for a kid is they're a kid. There's no excuse for an adult who should manage the risk. You should manage your risk before you take the risk. I have a saying, manage your risk before you take it. And so you could be a little bit more objective. Hard to manage your risk after you take it because you're going to have a bias. You're going to have some emotion, no matter how good you are at harnessing that emotion, whatever. So that's part of a plan. Know where you're going to get out before you get in. One of the first things I learned in education I took back in 1997, it was for pit trading, because electronic trading hadn't really caught on yet, wasn't here in the States. Pit trading, the classes was, he walked in and he said, know where you're getting out before you get in. Second trade first. It just means like a shortstop in baseball. If it's hit to me, where am I going with it? If you open up a position right now and it's a long position, where are you going to get out for a loser? I got 4 kids. They know how to get out winners, but they're not good at getting out of losers. So don't let that be you, or just get better at it. Always have this, your own personal chart where at least you're going sideways to higher. Whatever that chart is, that's progress. You're better there than you were there. And sometimes you get a little worse, but you're just trending up. Your own personal, it doesn't have to be your P&L necessarily, although you want that too, but you want your skill set to drift sideways to higher. Objectivity, how you feel, and things like that. So that's the kind of not low light, but not highlight of today, is not being aware of what could have been driving us lower. Because this is a 20 tick or 20 point move here. There's another like 25 point move there. Great moves after it was congested in here for the first hour and 15 minutes. So keep your powder dry. The markets, this might not be relevant for people watching this video in the future, but today is rollover from the SEP to the DEES. A rule of thumb is I go into the next month when it starts doing more volume than the current front month, which is generally on the Friday, not the Thursday. So if you're watching this today, you should be trading the DEES tomorrow, not today. Tomorrow, Friday, the day after the Thursday rollover. Everybody else doesn't really understand what they're doing. You want to trade the front month. Officially is the front month when it takes over in volume. Just a little tip. Another tip, subscribe to this channel so we get over 1,000. We could start doing live videos. YouTube forces you to have over 1,000 subscribers. So do that, and we're in good shape. Right now, some live analysis. You get this. Longs puke, bunch of selling. A chance that they pop. Good chance that they pop. If they don't, know where you're getting out before you get in.